Hello and welcome back to a new video. In today's video, we're going to discuss getting a mortgage with your parents. Now, before we delve into that topic, just to touch on another quickly, it's quite common in the UK for parents to gift or perhaps even loan a sum to their children for them to use as a deposit. So I'll just quickly discuss how that impacts you getting a mortgage. If it's a gift, as long as it's a non-refundable gift to your children, it will make no impact in terms of having any detrimental effect on their mortgage application. Normally, parents have to sign some sort of gifted deposit letter, but then after that, the mortgage lender is happy to accept that as a source of deposit. Now, if a loan agreement is written up between the parents and the children, that will then be quite detrimental. As soon as a loan agreement is created and that's declared to the broker, it's then a financial commitment. Whatever the repayments are, whatever the terms are monthly, that will then go against the borrower's affordability. So those two scenarios, they can have a very different impact on the child's mortgage affordability. It's also very common nowadays, with the way that property prices are going in the UK, for parents to refinance their properties and raise capital to then gift to their children as a deposit on a new property. There are lots of ways that parents are doing this. They're either doing a traditional remortgage and they're raising capital that way, but what's a lot more common at the moment is raising a lifetime mortgage, especially if they're over the age of 55. Lifetime mortgages, they're not offered by all brokerages in the UK. You've got to be suitably qualified, like us at Boon Brokers, but it can be quite an interesting avenue to explore. Effectively, how much people can borrow, it's not based on their income, financial commitments, or term period, like it would be for a normal mortgage. Instead, it's based on the person's age and the value of the property. So if you're perhaps retired, you have no income, you can't afford a normal mortgage, but you have a lot of equity in your home and perhaps you could tap into that to raise money and gift it to your children as a deposit, a lifetime mortgage may be more suitable for you. It's worth getting in touch with us to explore that option. So what are the implications of someone buying a property with their parents? There's quite a few to consider. The first one being the term period available on the mortgage. Now, when you apply for a mortgage, you can normally get a term up to age 70 or 75, and term is always based on the oldest applicant. So if perhaps you're buying with your father, let's say for example he's 60, you could only go for a 9 or 10 year term, or maybe a 14 or 15 year term depending on the lender, and that really reduces the term available to you. Whereas if you're in your 20s and you were buying by yourself, you could then maybe go for a term of 35 or 40 years, and it really stretches out your contracted monthly mortgage payments and makes it far more affordable for you. So by buying with parents, just be aware your term might be limited, and that will quite significantly increase those monthly mortgage payments. Another factor to consider is the tax implications. So if you're buying with parents, the odds are is that they may own their own property, and if they buy another property with you, additional rate of stamp duty will apply to the purchase, so the tax will be far more. And sadly, if you're a first-time buyer, you'll lose your tax exemption. So at the moment in the UK, you can purchase a property up to a certain sum. At the moment it's 425,000, I believe, without any tax payable at all. This is changing all the time. A few years ago, the limit was 300,000, but now it's changed recently. But sadly, if you do buy with someone else who's owned a property before, or say your parents who own a property currently, then you'd lose that first-time buyer stamp duty exemption up to that point. Another factor to consider is if you're buying with both of your parents, it means there's going to be 3 of you on a mortgage application. Now, most people don't know this, but most lenders only allow a maximum of 2 mortgage applicants on an application form. So by having 3 of you on there, that in itself will limit how many lenders you have access to. Another factor to consider when buying a property with your parents, that again, most people don't think about, is if your parents do own a property currently, all of those costs, especially if they've got an existing mortgage on that property, they'll have to be factored into the mortgage application for your new purchase as well. So that could significantly affect their mortgage affordability, and you might not be able to borrow quite as much as you're expecting. So another topic that comes up all the time when chatting to first-time buyers is the option of having a guarantor mortgage. Now, Guarantor mortgages used to be readily available 10, 15, maybe 20 years ago, but nowadays there's very few lenders that offer these anymore. Guarantor mortgages effectively is where you'll have a guarantor, like a parent, who will guarantee the monthly mortgage payment if you miss those payments yourself. It's obviously a very significant risk to a lender of taking on a guarantor, and most lenders do not offer it at all anymore, sadly. The best thing to do if you are in that situation where you're looking for a guarantor mortgage, speak to a whole of market mortgage broker like us at Boon Brokers, and we can let you know of any viable alternatives that may actually be even more suitable than a guarantor mortgage. So thank you for watching this video. If you've enjoyed and you want to learn more, read the blog article below and subscribe for more content in the future.